Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, make sure to subscribe to this channel, hit that notification bell, and also like the content we're producing. Hit that like button on this video. How are you today, Brian?
Hey, Michelle, I'm doing great. How are you doing?
Good. Thank you so much. So today we're going to talk about small business retirement plans.
Okay.
We're going to cover SEP IRAs, simple IRAs, and solo or individual 401ks.
That's the three main ones. Yep.
Yep, absolutely. And just as someone who owned a business years ago, I was always told, just do the Roth, and I had no clue way back in the day that these even existed. So if you are a solopreneur, if you have a small business, make sure to watch this, because really at the end of the day, what do you want to do? You want to maximize your retirement. So is
So
it traditional?
true.
Is it Roth? Is it what's best for you? Are any of these better for you? So
over my years, Michelle, in the business, I think the scenario of why the Roth was always, and I love the Roth, don't get me wrong.
Sure.
Okay. And you can definitely max it out. But I think the reason why sometimes advisors push the Roth IRA first, because maybe they feel that the consumer doesn't have the additional funds to put in. And sometimes us as advisors forget to look at the whole picture and say, you know what, this person may be able to max it out. And once we start hitting some of these numbers in here, how much more that you can put into
you can save a lot more. Absolutely.
Lot more, which gets you closer to retirement sooner, which is the ultimate goal.
Right? All right. Well, let's dive into the SEP IRA, which is the Simplified Employee Pension Plan.
Yep. Okay. Let's start there first. Okay. This is, Michelle, this allows the employer, keyword, employer, to set up traditional IRAs for themselves and for their employees. Okay. There's no limit on the size of the business, which includes self-employed. You can do it for yourself, right? And your spouse. Sure. Doesn't have the startup and ongoing cost of traditional workplace plans like a 401k or 403b, the big accounts, right?
Right.
But here's the scenario. Remember I said employer earlier and emphasized it. This account only allows employer contributions, none from the employees.
Got it. So employers have to make the contributions.
Yes. And Michelle, the employer also must make the contributions equal to all eligible employees. And let's talk about the eligibility of employees, because that brings this right in. The maximum limits for eligibility are you must be 21 years of age.
Okay.
Worked for an employer for 3 of the last 5 years, and must have made $650 in compensation per year, at least that amount, right? But those are the maximum limit. An employer can make the requirements less, meaning basically say, look, you started today, you're in the account today. Here's what we're going to do. Okay. And so it's very flexible contributions for the employer. And
what about the contribution limits? Can we talk about that?
Yeah. Let's hit that. It's based on the first $305,000 of compensation for 2022. Okay. And your annual limits are the smaller of $61,000 or 25% of your income.
Okay, so if your income or the other.
Yeah, one or the other is the smaller of the two. So 61,000, or let's say your income's 100,000, the most you can put in is 25% of that, which is 25,000. So it's the smaller amount. The employer does get a tax break. They can deduct the contributions. So because the funds, the employees also get tax break because the funds go in pre-tax.
Pre-tax, okay.
And they're vested immediately. So if you quit your job tomorrow, you can take your funds and walk away. So
it's not like a workplace 401k where you have, there may be a different vesting schedule. This is 100% yours to keep when the money's in there.
Yep.
Okay.
So that's the SEP IRA.
Got it. All right. Well, let's talk about the simple, which is what this, it stands for. What? Let me try it. Savings Initiative. No, Savings Incentive Match Plan for Employees. What?
Who came up with these, right?
Right?
Yes. But here's the difference between this one and the last one, Michelle. A big difference is it allows the employers and employees to contribute. Both of you can. So if you feel your employer's not putting enough in, you can put in, right?
Got it. Okay.
It's great for smaller businesses. You usually see this, Michelle, with less than 100 employees. But the employer does have required contributions.
Okay. What are those?
It could either be matching contributions up to 3% of what the employee puts in, or 2% non-elective contributions. What that means is employees don't have to contribute, but they can still get that 2% non-elective contribution. The employees don't have to put that in. So it's one or the other. It's not flexible like the previous, like the SEP was, right? There's a set percentage. You've got to do one or the other.
Okay. Got it. And what about vesting? It's 100% vested? Same
100% vested, easy to set up, kind of like the SEP also.
Okay.
So if you take the SEP and just change these little differences here, now you understand how that plan works. So.
Okay. All right. So let's talk a little bit about the 401k, the solo or the individual, depends on who you ask what it's called.
Right.
401k. Who's
this?
I
401k, individual, 401k, or solo. Yeah. They're all different names. Everyone calls them something different, but they all mean the same thing. So great for small businesses with no employees. That's why it's called individual or solo. Made for self-employed and their spouses. And the business owner this is kind of like double dipping, right? I'm not going to say it's double dipping. It's kind of like double dipping. Business owners can contribute as the employer and as the employee.
Interesting. Okay.
So, but there are contribution limits, again, kind of like before, up to 25% of the compensation, up to $61,000 for 2022. So 25% of your compensation, up to a maximum of $61,000 for 2022. Okay. It is deductible as a business expense. No requirements each year to contribute. So in bad years, the market's down, whatever, your business isn't doing well, you don't have to put as much in. But in great years, you can go up to the contribution limits. So no requirements each year to contribute. But everyone in there, you and your spouse, if it's just you and you're the employer and employee, contribution limits must receive the same percentage. So,
okay, that's huge.
That's for the employer side.
Okay.
For the employee contribution limits, you can put, Michelle, up to 100% of your compensation up to the limit of $20,500 for 2022. Kind of cool, right? And if you're 50 and older, up to $27,000 for 2022. And you can make pre-tax or after-tax contributions. So you can have the Roth inside there.
Okay, so is it the total employer and employee contribution that can't exceed 61?
Employer contributions, remember, you can do both. So you're separate people. Up to
so you can go up to 20,500 and up to 61. So you could technically save.
An employee could put up to 100% of their compensation in, up to that $20,500 limit. So let's say you made $20,000 for the year and say, you know what, this is my side job. All I want to do is max it out. And but I know people that put 100% of their compensation. They work 1 day a week and put 100% of their income every week into that I-401k.
Okay, interesting.
They're allowed to.
Are there any requirements to set this up?
It's simple to set up and it's easy to administer, a few small forms, but there's no age or income restrictions. Okay. But you will need an EIN number to open up one of these. This
have a business
on the Social Security number. So pretty cool, actually.
All right.
Simple.
Anything else on that? Yeah. Anything else on the 401k?
Well, let's go back to what you said before in the beginning. Was most people don't know about these.
Yeah.
The 401 or the Roth IRA and the IRA here, you can set these up and throw money back. But okay, so you can put up to the $6,000 or $7,000 limit.
Yeah. Under 50, 6,000. Like that's not going to.
Yeah, I mean, that's not
Very smart.
enough to retire on securely in today's world.
No,
So,
not at all.
definitely look at these if you're solo employed, you're self-employed, got a small, even a side business, you can do this, Michelle. So
Absolutely. All right. Fantastic. If you liked the content of this video, hit that like button. We'd appreciate it. It helps us grow the channel and also lets us know that you like the content we're producing. And if you have a question about IRAs, for self, whatever, we don't care. 401ks, anything having to do with retirement, drop it below. Yeah, we answer these. And we appreciate everybody who's been leaving us comments.
Very good comments lately too, by the way.
Yeah.
Thanks, everyone. Thanks.
Yeah. All right. Well, thank you, Brian. And thanks everyone for watching. Have a good one.
Thanks.